Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really pleased to tell you that I'm here with John Sclodnick. He is the CEO and he's the director of Nevada King Gold Corp, a company I've been following some time in my newsletter. I should also mention that I'm not being paid for this interview. It's simply a company that I think needs exposure. It's, as I say, I'm covering it in my newsletter, and I think a lot of people need to learn to know the story. And I must say that as I started preparing for this interview, I was saying, I'm not sure why I don't have more shares than I have. But in any event, it is a very good story, and John is here to talk about it and to explain it to us. I guess maybe before I say hello to John, I should tell you that it trades in Canada under the symbol NKG. You could buy it down here in the States as I have under NKGFF. 424 million shares outstanding at about 14 cents of US money. Gives it a market cap around $59 million. Very modest these days as mining companies are picking up their share prices. But I think when you see what this company has, you're going to realize, yeah, it's a pretty opportune price. 1.1, I guess, ounces of gold in the resource, and they're mostly oxide. I think maybe all oxide ounces, most of which I think are open pittable. So if anybody knows anything about Nevada oxides, if you get more than a gram per ton, that's pretty darn good. John, thank you so much for joining me today.
Yeah, thanks for having me on, Jay, and appreciate your support of the company.
Yeah, it's well, and as I say, when I started preparing for our discussion here, I said, wow, this is even better than I thought. And I guess I haven't kept up with some of your progress the last year or so. Maybe you start out by talking a little bit about your background and why you were attracted to become the CEO, or why you desired to be the CEO and director of this company.
For sure, yeah, yeah. No, you're right. It's a pretty unique juncture too, if you look at the chart. But we'll get to that. And
Mhm.
for myself, I spent over a decade in equity research.
Wow.
So I was covering exploration companies right through to large cap producers, royalty companies.
Mhm.
And this one came on my radar. I think it was the same as you when we saw that 11.64
Yeah.
gram per ton intercept over 108 meters.
Yeah.
That was the best hole drilled in Nevada in 2023. And yeah, came across my desk and I was like, what is this?
Uh-huh.
And looked into it, saw Colin Cattell was behind it, who I'd met previously from Newfound Gold. And I pushed the investment bank that I was at to cover this name. I thought it was a really interesting story with those high grades. It's a fairly simple story.
Mhm.
Nevada, disturbed site, everything you're kind of looking for. And so the way I viewed it was, if you could put a gold deposit anywhere in the world, you'd pick right here with the easy access, everything that you're looking for, obviously skilled labor, and some de-risked metallurgy, just given that there was past production there, that you can get the
Uh-huh.
gold out of the rock. So it was one I wanted to cover. And it just was a really interesting setup. And so to have the opportunity to come over, work with a really strong team, obviously, got to know Colin
Mhm.
before coming over. The team at site is very, very impressive. And the other kind of steps that I took before, making obviously a massive career change, was doing significant due diligence and talking to different corporate groups that may have access to data that I didn't, make sure that there weren't any kind of red flags that I might have been missing. Everyone that I spoke with was very supportive of the project, saying this is a quality project. The question was, at that point, when we had 600,000 ounces of resource, could it grow? You've got a high grade core there, but can this thing grow? And
Uh-huh.
we've since shown that it could. And we're going to continue to show that it will continue to grow. So really what gave me comfort coming over was the team, the jurisdiction,
Mhm.
and the grade would be kind of the three things. And there's enough risk with gold exploration. Let's keep the risk to gold exploration and finding gold rather than nationalization, some of the stuff that you see with other projects in different jurisdictions.
Right. Well, that's true, and I think at least for now, you're pretty safe in Nevada. If you're not safe in Nevada, I don't know where you would be jurisdictionally. But in any event, talk a little bit about your resource currently, and I think that your goal is, I think, as you just alluded to, to develop a major asset that big guys are going to have, right? Do I have that right?
Yeah, no, absolutely. And so, yeah, looking at this historically, when I was covering it, there was a 600,000 ounce resource. You had 400,000 of those in the M&I category, and
Mhm.
that was just based on 75 holes. So it wasn't the highest quality resource before. And so we did a lot of work, in filling that and figuring out where are these high grade structures, because it's a bit of a unique resource to have this kind of grade in an oxide system.
Mhm.
Those high grade, those bonanza type grades, like that 11.6 gram per ton over 108 meters, that's where these cross cutting faults intersect.
Uh-huh.
So it was a fairly densely drilled deposit, really to figure out where are these cross-cutting structures to be able to put on the proper constraints on this resource. So we managed to increase that. The M&I went up 122%. We
Mm.
now have a million ounces in M&I and overall 1.1 million ounces in all categories. That M&I grade is 1.14 grams per ton. Overall, it's 1.1 grams per ton. But like you mentioned, you've got heap leach operations that can stack, 0.2 grams per ton and make,
Make money.
very good cash flow. Yeah,
Yeah.
at these gold
Especially,
prices,
yeah,
man, they're printing dollars. So
yeah.
we're happy with where we're at. About half of the tonnage would report to a heap leach, and about half of the tonnage would report to a mill. There's a subset of that where you've got about half a million ounces at 4 grams per ton. So
Uh-huh.
that's a real high grade core. The silica breccia material is what hosts that high grade. And that's a hard rock, so we'll need to crush that and put that through a mill.
Mhm.
The non-silicified volcanics, that's a material that will stack on a heap leach pad. And from the met work that we've done, that can be stacked run of mine. So we're really happy with what we've got there in the resource. The other thing I should mention with the resource is when we put this out in June, at that point, kind of the common practice is to run the 3-year trailing gold price
Mhm.
and the
Right.
3-year trailing silver price. At that point, I mean, this is June 2025. That was $2,200 gold, $25 silver that we applied. So obviously a significant change here. If we were to look to update the gold prices and silver prices on that, you can potentially lower the cutoff grade, bring in more ounces.
Mhm.
But we're comfortable with what we have at those gold prices. The rest is upside, and we'll leave that there.
Yeah, I guess you haven't probably haven't done the number crunching yet, and the data. Look at the data to figure out what this higher $5,000 gold, $75 silver means, because you do have a fair amount of silver there as well.
We
So,
do.
but it can't be bad. Let's put it that way. So if you start, yeah. So I was going to ask you about that. I mean, I mean, it's just such a rapid rise in the price of these metals that and you got to play it safe, and people are still looking at 25. I think really that a lot of the market, the investors are still believing that this is a bubble, that this isn't something that's going to last. I happen to be of a different point of view, but that's neither here nor there. I suppose you have to look at things conservatively too, to a certain extent. And as an ex-banker, you know how the bankers are looking at these things. So yeah,
Yeah.
they're always thinking about providing a gold loan or something like that to these producers and making a lot of money if things yeah, it's anyway. Okay, so the Atlanta project, you said somewhere in the literature that the best analog is probably Round Mountain, so 23.6 million ounce deposit. It's a very interesting story because you have this high grade. It reminds me so much of a lot of the Carlin style projects in Nevada where you have the nice oxides on top and you can make a good money out of that. And then you get down a little deeper and you find lo and behold some extremely high grades, which you're showing here. And then I hear you talking at somewhere. Is it an intrusive? Would you say, or is it a mixture? You have some Carlin potential there too, I believe, in some other parts of the project. Um,
Yeah,
but how do
exactly.
you look at it in terms of a geological model?
So you're right. In Atlanta South is where we're finding this Pogonip limestone, which is that Carlin type
Oh,
of deposit.
yeah.
That's not what our resource is based on. That's what we're investigating with the Phase 4 program. So we're going to try to figure out what's going on there. When Kinross actually owned this property in the early 90s, and then Goldfields had it. They were most interested in the Pocanip limestone in this Carlin type
Oh,
deposit material. So there's some historical holes there. They weren't angled properly. This is obviously a different Kinross than today, the early 90s Kinross. So yeah, this is something that we're certainly following up on and investigating. And obviously with the Carlin type deposits, these have the potential to absolutely dwarf the size of the Atlanta resource zone. In terms of that Round Mountain analog, it's really based on both the oxide nature and the fact that it's a caldera hosted system, and the
uh-huh,
fact that it's the nearest major operation as well, about 250 kilometers away. So
sure.
with the caldera, you've got a volcano that's collapsed in itself, and that allows kind of that fluid, the magma, to flow along the edges of it, and
Uh-huh,
that's where our resource sits, that 1.1 million ounces.
uh-huh.
So when Round Mountain first went into production, it only had 1 million ounces, and so it's since produced and found, and now with the reserves that it has, 23.6 million ounces have since been discovered. But it did go into production with 1 million ounces. So
Mhm.
we're at 1.1, and I don't think we'll have a chance to get to 23.6 million ounces. I think someone might scoop us up before that point.
Yeah,
But we are interested in investigating along the margins of this caldera system. That's generally where our targets sit. It would be kind of a bit bizarre and shocking if there was only gold, if the magma fluid within this caldera system only deposited gold in this one specific location. We'd be
yeah.
very surprised.
Hmm.
Um, in terms of what you're talking about at depth, so we were drilling towards the west, and we got down towards 500 meters,
Okay.
and it was still oxide, which is very unique. Like
Wow.
to like
I didn't
like
know
like
that.
you mentioned, yeah. Normally, if you encounter this transition zone, and then you encounter the sulfide zone, it's there somewhere. We just haven't hit it yet, and just given the cost of drilling to drill 500 meters, we can just get a lot more bang for our buck drilling closer to surface, and that's really kind of what we're looking for, is open pittable, heap leachable, or millable if the grade's high enough,
Mhm.
but closer to surface, open pittable type deposits. So
Mhm.
we do expect that the resource, we've shown that it does continue down dip. We just stopped drilling it, but I would expect, at some point when this is in production down the road, that it would transition to an underground, because yeah,
Yeah.
that system does seem to continue at depth. Fortunately for us, it does also come back towards surface as you move further east, in that Silver Park, which we're looking at right now with our phase 4 program.
Yeah. Yeah. I mean, it seems to me that longer term, the depth, I mean, it seems to be getting stronger at depth, thicker, almost bulk mineable, maybe when you get down there, the way. So those incredibly high grades that you got, those are in oxides,
Yeah,
11.6 grams per ton. I mean, it's just ridiculous. It's
it is for
I,
sure. No, yeah, you do a double take when you see that.
yeah, and I mean, there's several. I think you list some 10 of the highest grades, really high grades that you pulled. I mean, the worst one was 4.98 grams of gold over 43 meters, the worst one. Well, anyway,
Mhm.
so you have lots and lots of really high grade stuff, and it gets richer and stronger at depth, but you have this enormous amount of near surface exploration that you're still poking around at. You had a phase 3. I think you finished your phase 3 drill program. Talk about that, and what did you achieve? What did you learn from phase 3? And then maybe talk
Yeah,
about going forward with phase 4.
for sure. Yeah. And so you're right. If we didn't have anything else to explore on this property, we would have kept going at depth and investigating that. We didn't want to keep the story, straightforward in terms of it being
Right.
open pit, oxide.
Hmm.
We don't want to be, getting into underground and all of that. But if we had nothing else, we would continue to drill at depth. But yeah, we decided to pivot with the phase 3 and take a look regionally. Like I said, we have the entire caldera on our 130 kilometer square land package. So it's a massive land package. There's lots to explore. Really, the only areas that had been explored were the areas that outcropped, and those became two mines. So the only two areas that outcropped, that was the Atlanta resource, the
Hmm.
former Atlanta gold mine, and the Silver Park mine. So that's kind of a natural next place to look. So we started looking at Silver Park. We were having some success there with our phase three program. The purpose of the phase three was to find potentially satellite deposits
Hmm.
to add to the overall resource. And yeah, we started having some nice hits that were close to surface in oxide material as well at Silver Park. We also had above cutoff grade gold mineralization at Atlanta North and at Atlanta South. So those were the three targets that we were focused on with the phase three program. And so, it's a 130-kilometer square land package. These targets are 2 to 4 kilometers from the resource. So these aren't, step outs. These are serious, you almost call it greenfield, but it's certainly reconnaissance type drilling. And so to find gold there at all three of these areas, we're just finding gold mineralization kind of everywhere we're poking holes on the property. So we're pretty excited with that. The focus now with the phase four is honing in on some higher grades. We're
Hmm.
getting some good hits at Silver Park. So that's now at a point with the phase four program where we're looking to, increase our definition and kind of delineate potentially a resource there. So at this point, we've mapped a 300 by 500 meter mineralized footprint. We're also looking to fill some gaps in there to potentially get that towards an inferred resource category. Also, our most recent press release, we used a RAB drill, which is a rotary air blast drill. It effectively can only go down to 30 meters. The purpose of that was to look for geochemical samples just to get more information.
Hmm.
Where's the bedrock and that type of work, not necessarily to drill to figure out the assays, but we did assay the material, of course. And we're happy with the results. We're like, wow, this is actually quite interesting. We weren't expecting this. So we put out to the market that, we have a 350-meter gap from that main Silver Park East area, that main mineralized footprint. There's now another gap here, 350 meters to the south. We're hitting, 0.93 grams per ton gold equivalent over 15 meters starting at surface. So we had a number of hits there that start at surface. And, we're pretty keen to see how this cluster of drill holes, shallow drill holes, connect to that main Silver Park area. So that's going to be part of the follow up. At Silver Park, there's also a 270-meter gap to the east where we've had some good hits as well. So we'll also look to close that gap. If these all connect, obviously, the size of Silver Park gets, significantly larger. But right now, yeah, we're both focused on infilling Silver Park, seeing how these step outs connect, seeing if we can push those step outs further as well. But so this is one of the focus areas. We've got 5,000 meters budgeted to that with our phase four program out of a 20,000 meter budgeted, fully funded phase four program. The other 15,000 meters, with that, we're going to continue to follow up on Atlanta South,
Hmm.
Atlanta North, which were the two other areas from our phase three program. And then we've got a new target area called Western Rim.
Yeah.
This is the most recent one, and when you talk to the geologists at site, this is the one that they're most excited about.
Really.
So we're going to need to wait a little bit to put some holes in there. We just need to permit those drill sites. So once we do that, yeah, really excited to see what we have there because we've got a 1 kilometer vein that shows gold and silver and quartz vein. We've got a swarm of a 2.5 kilometer swarm of quartz veins as well, also with gold and silver in them. We had a 20.8 gram per ton rock chip sample there. And also, the geophysics so far, we're going to have to run more, but early stage looks interesting. We also ran hyperspectral over them, which is kind of relatively newer technology, and it shows a strong signature of this illite crystallinity, which it effectively shows that there was something very, very hot going on there in the past, and it also just jumps out at Silver Park, and it jumps out at the Atlanta Resource Zone. So we're pretty keen to get into this area.
Mhm.
In terms of the timeline for that, we're first drilling Silver Park. The challenge to all of this is we want another rig. We have one rig at site. It's so competitive right now
Uh-huh.
with everyone suddenly drilling. We've been drilling aggressively since 2018, but the drilling companies, they if they can avoid a moving day, they're going to avoid a moving day.
Sure.
So yeah, we'd like to get another rig at site and drill a little bit more aggressively, but right now it's Silver Park East that we're we're focused on. Then we'll probably get to Atlanta South next. Maybe Atlanta North if we don't have the permits yet for Western Rim, but hoping to get in there around mid-year at Western Rim.
So Silver Park, Atlanta South, Atlanta North, they're all part of the same system geologically, do you think, or do you not know that yet?
Atlanta Silver Park certainly is connected. We've done enough drilling there. We see the same unconformity at the Atlanta resource zone, which starts to dip and then it starts to come back towards surface. So we feel like that is the very same mineralizing event. So we're quite comfortable with the rocks there. We haven't done met work on that yet, so time will tell. But at this point, we've got a level of comfort that hopefully it shows similar recoveries once we do that met testing. We're currently running a little bit of cyanide solubility. We've got some cyanide solubility on a few holes, and it looks good, but we want to run a bit more just to get a little bit more comfort on those gold recoveries. But from what we've seen so far, it looks like that will recover okay. Hopefully to the same, if not better, than the Atlanta resource zone, where we love the recoveries that we're seeing there also. At Atlanta North and Atlanta South, I mean, these targets exist along the same mineralizing fault, that West Atlanta fault. We only have a cluster of 7 holes right now in Atlanta North.
Okay.
So we'll see one of those we were happy with. It hit about 0.3 grams per ton over about 37 meters at about 37 meters depth. So as a non-geologist, this is something that I would like to follow up on. The geologists, we put this land package together to find elephants. And so the team at site, the geologists, they want to find the elephants. Those are at, potentially Atlanta South and potentially Western Rim. So they're very excited for that. For me, I want to put together a high quality, strong economic project to show to mid-tier and majors. And so Silver Park, we don't expect it to be an elephant, but it could be something quite significant. If we've got 1.1 million ounces and we've got another 200,000 ounces, maybe, as I said, that's a kind of baseline that we're very comfortable with. That's not really factoring in any of these step outs or connections or anything like that. So if we can have 200,000 ounces there, then suddenly you start creeping up towards that 1.5 million ounce number, which is a number that mid-tiers mention as being critical mass for them. That's where you can kind of start to see that 100,000 ounce per year annual production profile over a 10-year mine life. And if you're a company producing 400 to 600,000 ounces, that's something that moves the needle, particularly given its oxide in Nevada, likely strong margins. We haven't put out economic studies yet, but I would think probably strong margins there. And also obviously a jurisdictional improvement for most companies as well. So it starts to look quite interesting, but that's the threshold that we want to get to.
Economic studies, when might they occur, and how much more work do you want to do before you do that?
So it's a bit of an iterative process as we're getting more information back. Silver Park is something that we want to first figure out what we have there. If we're having success with this phase 4 drill program with the infill work, we'd look to put out a resource estimate there. And then, maybe we potentially put out a PEA once that resource is out. An inferred can come into a PEA. So that's something that would look interesting. We so far have done internal scoping studies. So we've got a comfort on, what we know at Atlanta Resource Zone and how that looks. We obviously like what we see very much, given the grades that we have there. Obviously, there's enough benchmarking with other operations in Nevada that you can get a pretty solid handle on what your operating costs might be. And CapEx, I don't think, it's not really a thumb suck. You can have a decent idea there as well when you go to these third-party mining engineering firms. So, we're comfortable with what we see. We've seen studies coming out at, $3,000 gold. And, when we put out our resource at $2,200 gold, we'd be, thrilled to be putting out economics at that number, let alone sensitized to spot. So we like what we've got there and feel that's kind of an ace up our sleeves for potentially maybe back half of the year, maybe early 2027. It really kind of depends on how the drilling's going.
Sure. I saw some reference to Atlanta South as being a Carlin style mineralization. Is that something that your understanding?
Yeah. It's looking like a Carlin type deposit, and so there's a number of other those that host, large deposits in Nevada.
Yeah,
Archimedes being one at about
sure.
5.5 million ounces. Long Canyon at about 2 million ounces. So these have the potential to be quite large. So far, we drilled. It was about zero point 0.2 grams per ton, over around 50 meters. So it was okay, but we feel like we're on the periphery of it.
Hmm.
If I when we think back to the Atlanta resource zone, and for example, that hole that was drilled at 11.6 gram per ton over 108 meters, that was right through the guts of a fault. That got lucky. When you step out, 20 meters on either side,
Yeah,
suddenly you're getting grades of 3 grams per ton on one side, 1 gram per ton on the other side.
yeah.
Still wonderful grades that work in oxide. But right now we're thinking that this hole is even further away. And so we need to vector in on where these high grade areas are. Where is the fluid source there?
Hmm.
We're thrilled that it is mineralized in this Poconet limestone. Shows that there is gold fluid somewhere, and for us right now, it's about honing in on where that is. And we're using all the tools under our tool belt to try to figure that out.
Hmm.
Everything is other than what outcrop, which became the Silver Park mine and the Atlanta mine, is under kind of this post mineral cover. So it does an outcrop. So we're using geophysics to try to take a look under the cover there. CSAMT is something that's been working quite well for us.
Hmm.
Obviously, soil sampling as well, geochemistry, like I mentioned, hyperspectral as well. So we've got a number of tools. We've also kind of run this through machine learning.
Sure.
The new VP exploration that we brought on recently, he left a CEO role for another Nevada-based junior explorer. So it shows that he's pretty excited with the potential to be involved with large discoveries. So it was a huge feather in our cap for that. He would come over and be VP exploration for Nevada King. And he's also trained in machine learning. And so he's
Hmm.
putting all these data sets, and we've got significant amount of data, both from historical drilling, the drilling that we've done, the geophysics, the geochemistry. We've put that all through machine learning, and it kind of spits out potential areas to poke your holes. And those generally align with what we were thinking. And now it's just a matter of time, and we've got to get there. And first, we're going
Hmm.
to do Silver Park, and then we'll get to that Carlin type deposit and see what we've got there.
So you've got a lot of money now. What do you have in the till? And I guess you got it. You're really wanting to get another rig or two, I guess, huh? It's if you could
We
find one.
do, yes.
Yeah,
So we're fully funded for this phase 4 program, and
yeah.
we ended the year with over 6 million Canadian in cash. So with
Hmm.
our drilling costs of about US $80 a meter, with that currency conversion, that would cost about 2.5 million to comfortably do that drill program. So we're quite comfortable with the fully funded phase 4 program. And yeah, that's budgeted to have a second rig as well with our timelines here. So hopefully we can get a second rig. If not at this point with the one rig, it just means that that cash balance lasts a little longer, puts a little less pressure on us. But yeah, we want to bring in a second rig. I mean, we're an exploration company. We don't want to
Hmm.
be sitting on cash and just
Yeah,
marketing. We want to be out there drilling. The best marketing is having success with the drill bit.
yeah. Well, everybody wants to be out drilling right now, and there's a
Yeah.
shortage of rigs, and I guess, well, that's high prices bring solve results. There ought to be some new rigs coming online too, but then you have to have drillers that know how to drill
E-
that stuff too. So it's
Exactly.
not just a
No,
matter of
you nailed it, Jay.
yeah.
Yeah.
You
That
don't
that's
want
the
to have
issue. It's
somebody that doesn't know what they're doing out there. Bring some New Yorker from Fifth Avenue to sit him on a rig and let him drill out there, right? It's probably going to be a disaster.
yeah. No,
Somebody,
exactly.
some banker at
That's
JP Morgan or
exactly our
something.
issue.
Yeah, no, hard to find. Yeah, talent is and finding good people is especially at a time like now when you have a bull market. That's I think the bull market of my lifetime for sure. So yeah, I mean, it seems to check all the boxes. You're in a great jurisdiction, easy to work in Nevada, infrastructure, no issues there, I think. Technical team is really strong. So I don't know, just summing up, what would you like to tell our viewers? What would be some of the things they should keep their eyes on for, some sort of share price movers that might be coming their way?
Yeah, and just the other thing I wanted to touch on was, we've got a refreshed management team here. So, before, we had an executive chairman role. We've eliminated that. Colin Cattell has moved to a chairman role, so it's not an executive chairman role.
Uh-huh.
So, the board just makes standard board pay. I came in as CEO to replace Colin, and we've got a new CFO in place as well, a new VPX. We're a young, hungry, keen management team. And this allows us to really reduce our G&A spend. This allows us to target 70% of all of our cash outflow going towards drilling and exploration. So I think that's a bit of a high watermark for exploration companies, something that we're very focused on. We're aligned with shareholders. We've got about 37% share ownership with management and insiders. So we're a very well-aligned team. We're going to make our money when shareholders make their
Very
money.
good. Very good point.
So that's an important caveat there.
Mhm.
Also, in terms of the juncture, I think it really is a very unique opportunity here. When you look at our chart, most stocks have doubled. You got the GDX, having multi-baggers off its lows. We're actually, I think, still down on a year-over-year basis, and that came from putting out that resource update in June, where there were significant expectations. It can be a bit of a gift and a curse putting out, these
Yeah.
phenomenally high grade intervals where they're awesome headline
Right.
numbers. If
Right.
you take all of the assays that have been released, like I mentioned, there's a high grade core that goes through the mill. There's also the low grade material that gets stacked on the heap leach pad. So we put out the resource update and the stock got hit. I think a lot of retail investors that were in the story were expecting more ounces and higher
Yeah.
grades, even than the
Right.
1.1.
Uh-huh.
To put that into context, like this 1.1 gram per ton resource grade, it does show us the second highest oxide deposit in the US.
Right.
The one that's higher, sorry, I should say with pre-revenue companies, but the one that's higher, they're actually based in California, and they're now focused on rare earths, just given the challenges of advancing gold mining there.
Mhm.
So this is still, just a step above anything else that's in the state, with the grades. But really, to get back to kind of what we're doing, we had a pretty significant reset here, had some turnover with the shareholders. When we started doing the regional step out drilling, like I said, we're very happy with finding, roughly a half gram per ton type material in Silver Park that's near surface. Is going to work
Sure.
wonderfully for us. But in terms of some shareholders that were in the story that wanted more, phenomenal headline numbers, we want that too.
Yeah.
But right now we're looking at putting together a very strong economic project. It's not necessarily just putting out the highest grade intervals as you can. Again, we want to find those. We're looking for those. But that caused the stock to sell off and not to rebound. Really, it only started to make a move in December.
Hmm.
So I think it sets up a really interesting juncture here. With a 60 million US market cap, 1.1 grams per ton, we're trading at just a little under $60 an ounce. Like, it
Yeah.
is crazy. We're trading materially below our developer peers. And given the oxide nature in Nevada, I would argue we should be trading at par, if not a significant premium, to other developers, given the jurisdictional advantage that we have and the grade that we have and the potential margin that we have on those ounces. As not all ounces are equal. So it sets up a really interesting opportunity here. After the sell-off, I was in the market buying. I first participated at the 34-cent round in November. Got my average cost base down to about 30 cents.
Uh-huh.
So we're here to make sure that all shareholders make some money. We also have some good endorsement from some new shareholders coming on, where this is becoming a more institutionalized story.
Mhm.
We brought on DWS, which is the Deutsche Bank asset management arm that was in that November 2024 round that I participated in. And then we had Franklin Templeton come in at a
Mhm.
25-cent round in April. And yeah, we love the setup here. We've got a lot of institutional interest, and think that it's a really phenomenal setup here. And the corporates and the institutions, they are so dialed into the story. We've got a number of CAs in place with mid-tier producers. When they talk to our site team, they're thrilled with the work that's being done. So it's a very high quality team at site. So anyway, sets up a very unique opportunity here, with a huge catch up trade, I think, to come. Like I said, we're in the midst of a fully funded phase 4 drill program. We're putting out updates with those assay results. If those are successful, we'll be putting out a resource update, or I should say a resource estimate if it proves to be successful at Silver Park. I think
Yeah,
those are some massive catalysts here to get this story re-rated and trading at a more appropriate level.
right. Well, I'm glad you brought that up, John, because that kind of explains why the stock is down. I mean, people were expecting something phenomenal, and it is phenomenal. As you say, not all ounces are created equal. So I think once you do the economics, it will become apparent to people. It's obviously apparent to your institutional people now that you've got more than people realize. So maybe the amateurs saw the big numbers and they thought that you should just have a solid cubical mile of these kind of numbers. So, Mother Nature isn't like that. You and I know that. Been around this
Yeah,
long enough to know it ain't like that, but it's pretty darn good when you have $5,000 and 1.1 or one over a gram per ton and oxides going to 500 meters down. That's incredible. Anyway,
yeah.
well, this is certainly a story, and I kind of woke up on it when I prepared for this discussion, realizing that, wow, yes, compared to a lot of other things out there, this looks really, really good. I'm looking forward to meeting up with you in Toronto at the Metals Investor Forum, and we'll talk some more. You'll have a chance to reach some more people from there. And John, if there's anything else you want to add, I guess you probably pretty well summed it up there.
Yeah, and between now and the Metals Investor Forum and PDAC, hopefully we'll get some assays back from Silver Park. That's the area that we've been drilling, and
Okay.
hopefully get those out to the market. So should be an exciting catalyst. And yeah, I mean, ultimately we didn't put this land package together for 1.1 million ounces. We put this land package
Uh-huh.
together to find, a significant mineral gold endowment, and we're actively looking for that.
Yeah, you own the whole caldera, district,
We got the whole caldera.
sort of a district play, I would say, potentially.
Exactly.
So you're
Yeah.
picking away at it, and it looks really exciting, John. I want to thank you very much for spending time with us and telling the story.
Thanks for having me on, Jay. Really appreciate it.
You bet. Okay, that's it for now, folks. But I am going to have another interview this week with Andy Scheckman of Miles Franklin. Very interesting story. I think you're not going to want to miss that. Until we meet again, goodbye and God's blessings to you.